go across to Gautam Shah, Associate Director and Technical Analyst at JM Financial, to tell us whether things are going to be this smooth technically as well. Gautam, hi, good morning, and thank you for joining us. Record highs as we speak, 8,140 has been crossed effortlessly actually, and 27,200 on the Sensex. In terms of the bull run, are we still in the nascent stage, you think, or now we're somewhere in the middle of this bull run and you should start to weigh the pros and cons at this point?
Well, I think the markets continue to be on a very strong wicket. How much ever cliched it might sound, but the bull market is on and is here to stay. And I think the way the markets have, reacted to some adverse news flow from global markets in the last couple of months, I think that's quite incredible. In fact, if you look at the price action itself, sometime in late July and early August, there was this setup on the charts which had turned a little weak. And it is because of that we said on your channel last time that maybe the market should see a period of correction. But what really happened was very interesting, because the Nifty just saw a 300-point correction from that level of 7,800 to 7,500. But if you look at the way the sectors and stocks behaved out of the index, it was completely a different story. The oil and gas index, the metals index, and the capital goods index, lost 10% each, while the Nifty was in that, a range, and it just lost about 300 points. And you had a scenario wherein the Bank Nifty underperformed for as much as 3 months, mid-May to about mid-August. And obviously we've seen the way the reality and infrastructure sectors have behaved. So if you really look at all of these factors, I think what we witnessed was really a running correction, which is very typical of strong bull markets. And I think we've seen something like this in that 2003-2007 period. I think this market is clearly headed higher. I think the way it's taken out that 78.40, 79.50 resistance in the last couple of weeks, I think that clearly suggests that this market just does not want to correct. Yes, it is slightly overbought. I think a lot of technicians might argue looking at some of the divergences, but I don't think that's important, because in bull markets you have to give complete importance to the price action, and I think the price action has been extremely smooth, as you pointed out. Also, I think when we look at technical studies, I think the moving average is one study that works brilliantly in bull markets. I mean, you can look at the 2003-2007 example, and every correction in the last 3.5 months, has stopped at the 50 exponential moving average. So I think this is something that has been working well, and therefore we would like to monitor it. And that's the reason I believe that till the Nifty is above 78, 7900, which I think is the new base for the month of September, I think this market is clearly headed higher. Yes, there will be corrections from time to time, but I think that's really going to be a minor one. I think 82, 82.50 is a minor resistance area, which we have been working with in the last couple of weeks. We are almost there, but I think the market will deal with it. But I think eventually in this leg of the run, we see the Nifty moving towards 86, 8700, and there I think we will have to do a review of the setup, whether the market continues to move higher or whether we see another period of correction. And the reason I say this is because October has seasonally, historically been a little negative month for our markets. So keeping that in mind, I think the next 2 or 3 weeks looks pretty comfortable, but as we get into October, things might just turn a little negative.
Okay. When you say comfortable, Gautam, is there a level that the market should worry about? I mean, would 8,240 be a level? Is there anything that should spark, say, correction or consolidation?
Well, bull markets do not have levels, because you are trading in uncharted territory and you really don't know where it's going to stop. I once again give you the example of 2003-2007 when the Sensex started off moving from 3,000 levels. Who thought that it's going to go all the way up to 21,000, and it's going to terminate there. So I think it's very difficult to put a number to the current bull market. If I have to really stick my neck out for the next 12 to 18 months, I think the eventual target for this bull market could be about 10,700 on the Nifty, and we could be there by December 2015. But this is a target for investor clients, for people who are trading this market on a regular basis, on a weekly basis. I think every small correction looks very damaging, because even if the Nifty loses 100 points, you have a scenario wherein suddenly you have so many stocks losing 5, 10, 15%. So I think from an investor's perspective, you need to deal this market differently, and from a trading angle, you need to keep a close watch at support levels. Also, I feel that that this is really the first leg of this bull market. You know, the last time when I was on your channel, I mentioned that maybe the market has completed the first leg. But I think, you know, the first leg of any bull market has a very fairy tale-ish feeling to it, because just about everything is perfect. The volumes are good, the momentum is great, the news flow gets better as we've seen in the last 1.5 months, at least on the local front. And I think there seems to be a herd mentality. I mean, there seems to be a herd which is really active in the market. And I think till the market does not really satisfy the appetite of you know, people who want to go long in this market, I don't think you will see a serious correction of 10%, which has really not happened so far. And this move that we've seen so far from January to September, I think is very similar to that move that we saw in 2003, you know, wherein the market doubled in about 8 to 10 months or maybe 12 months. So I think at some point of time, just about everybody is going to be satisfied, you know, right from the stronger hands to the weaker hands. And once they are satisfied, I think you will see a 10% correction, which I think has to happen at some point of time in the next 3 months. And then maybe we start the next leg of the bull market, which is going to be a much more measured.
So what are the stocks that could take the market to this 10,700 level by December 2015?
Well, I think I'm very encouraged with the way the Bank Nifty has behaved in the recent past. You know, even in last time when I was speaking on your channel, I mentioned that since the Nifty is making higher highs and the Bank Nifty is not doing that, you know, it was a little uncomfortable, because in the past, if you look at the correlation, they generally move hand in hand. And whenever the Bank Nifty has led the Nifty higher, it's always been a, you know, sustainable move. For 3 months, the Bank Nifty stayed in a 2,000 point range, and once it broke out about 15,700 last month, I think that was a very positive sign, because the Bank Nifty has behaved perfectly from January to mid-May. You know, it saw a phenomenal rise, which, you know, obviously all of us saw, and all of us, you know, I'm sure made money out of it. But thereafter, this 3 months of underperformance, I think has made the setup really, really strong. And now we feel that the banking index is really ready for the next big move up. And our eventual target, investors' target for the Bank Nifty is about 18,700 to 19,000. So I think there is serious money to be made in this particular index. And within the index itself, I think we like some of the private banks, you know, which have phenomenal setups. And even though they are trading at 52-week highs, I think you really don't know where they are going to stop, because if the bull market is intact, I think the private banks will continue to do well. And there, I think you have, for the Bank Nifty itself, I think you have good support around that 15,300, 15,500 mark. So I would like to believe that the Bank Nifty will continue to lead this market higher. Okay. Apart from this, I really like the way the oil and gas index and the capital goods index have corrected. I just highlighted that these two indices saw a pretty substantial decline of 10 to 12% in July and August. And now both these indices are really set for substantial upside. I think the oil and gas index has underperformed for a long time, and I think that time has now come for this index to really take leadership once again. And if it does take leadership, you know, it will really help the markets move substantially higher. So these three would probably be my best bets. But if you have to look at something safe and absolutely steady, I think that would be the defensives. Because, you know, this has really become an evergreen space. It does well whether it's the bad times or the good times. So you want to have a substantial part of your portfolio in FMCG, healthcare and IT. Because, you know, even if the markets have to move to the targets that we are talking of, I think defensives will continue to do well. Okay,
that covers all sectors, Gautam. But, you know, the serious outperformance has come really from the mid-cap space. Year to date, if you looked at, say, Bharat Forge, Motherson Sumi, the auto ancillary space, or for that matter, the mid-caps in the capital goods space, say, Voltas, Crompton, or those agri stocks which we don't speak about, you know, United Phosphorus, Tata Chemicals. What are the outstanding charts in the mid-cap space now?
Well, Lata, unfortunately, I cannot give you specific names because of the compliance policy, but I think this is a space that is looking very interesting. You know, if you look at the last 2 weeks, it's the mid-cap index which has actually made another higher high for the year. In fact, a new major high. And I think this suggests that this momentum is actually going to continue. You know, there are so many stocks in the market which did nothing for 5 years, and suddenly in a matter of 4 or 5 months, you know, they have moved up 2, 3, 4 times. So actually, patience patience is actually paying off in some of these mid-cap stories, which was always there. But because the market momentum was not there, they were just not able to move higher. And therefore, I think things have changed substantially. In the last couple of years, we've said this so many times on various channels that I think the best way to play the mid-cap space, at least for retail investors, is go through the mutual fund route. Because there you're going to buy a basket of 30, 50 stocks which are quality. Why do you want to rack your brains in a few names which you think is going to do well, whether it's based on fundamentals or technicals? I think the mutual fund industry is doing exceedingly well in the mid-cap space if you look at the kind of returns that they've given in the last 12 months. And I think this is the best way to ride the mid-cap rally in the next maybe 2 to 3 years.
All right, Gautam, on that optimistic note, we let you go. Thanks for giving us these long-term targets. I think that's what investors are most interested in right now.